Hey man, say man, how is your day, man? It's your favorite trader GDO coming out with another video, man. We about to go ahead and get off of these charts. I ain't about to waste y'all time because I don't want you wasting mine. Y'all want to know how to trade? I'm about to teach y'all how to get paid. Oh, you feel me? Yes, sir. Yo, my baby watching Alpha Block, so I can get I can get there with y'all now. Let's go ahead and get off in today, man. Real easy day, slow but easy. You get what I'm saying? And we're gonna take it from the top. We're gonna take it from the top. We're not gonna waste no time. We're not going. Is price still going? Okay. We're not gonna sugarcoat anything. We're gonna take it straight from the top. I really want to get this through your guys' skull. I really want to implant your mind with this. I want you guys to know this so that when you come into the market, you're not stressing about anything. All right. You know what it is, you know what it's not, and you're able to go in and execute. So from the top, what we're doing when we come into the market is going to whatever our highest time frame is. If your highest time frame is the daily, then you go to the daily. If it's the monthly, you go to the monthly. For me, it's the monthly, weekly, but I'm not going to the monthly. As a matter of fact, we will just to see what's there. There's nothing there. All right. So for the monthly time frame, we are looking for the internal draws of liquidity. The internal draws of liquidity are fair value gaps, inverted fair value gaps, or gaps. Okay. For me personally, I like sticking to the fair value gaps or the inverted fair value gaps. I'm not really worried about the gaps because usually they're accompanied by a fair value gap. So what is a fair value gap, you may ask? Well, the fair value gap is a 3-candle pattern that also goes for the inverted fair value gaps. So when you count the candles, 1 candle, 2 candle, 3 candle, opening between the first and the third, that's all the way through the board. 1 minute, 2 minute, 3 minute, all the time frames, 30-second fit, all the time frames when it comes to internals, they are a 3-candle pattern. 1, 2, 3. You know what I'm saying? 1, 2, 3. Opening between the first and the third. Opening between the third and the first. However your mind wants to flip it, it's that. As long as it's an opening between the first and the third. You understand what I'm saying? So for today, of course, being that this pink box, because all my internals are color coordinated, so I can know where they are when I'm on those lower time frames, because we all know the key to trading is following the higher time frames. All right, we don't want to get lost and have tunnel vision while we're in those lower time frames. So this pink is my weekly internal. All right, now after that we go down to the lower time frame. Now if you look at my screen, you guys know that I enter off the 2 minute. My 2 minute is the green, right? So if my external high before 9:30 and external low, right, is right here, I'm going to look for my daily internals that are relevant. All right. When speaking of relevancy, I'm speaking on whether price may interact with that internal or not. If we know price isn't going to interact with that internal, you can leave it, put it, it's up to you. But if it's most likely that that price action will interact with that internal, we need to put that internal down. We need to mark out that internal. So for the daily time frame, what do we have? Not only do we have this guy right here, 1, 2, 3, we can mark that out, but we have this what? Inversion. And why is it an inversion and not just a fair value gap? Why is it an inverted fair value gap? Because price has displaced through it, right? This was a start, 1, 2, 3, opening between the first and the third, and then price what? Displaced through it. So that's an inverted fair value gap. That falls under the umbrella of internal liquidity. All right, boom. Now we come up here. What do we have? 1, 2, 3, right? Opening between the first and the third. That is a fair value gap. Why? Because price has interacted with it, but it has not displaced through it, meaning it has not gone through it completely. This internal price action has gone through it completely. Okay. So once we find our daily internals that are most likely to be interacting with price action, then we go to the lower time frame, right? And then boom, you start, you know what I'm saying? If we were down here, this is where we started, right? So if I'm looking to the left, everything, and this is supposed to be blue. I don't know why it's green. I don't know if I just did that or what, but we're looking for, again, relevant internals. There's no internal, meaning price is balanced all the way into what? Here. So we mark that guy out, okay? Then when we come up here and go to the left, we could mark this out, but I'm not really too fond of this guy because there's also a daily here. So in my eyes, there's no need for it, right? You can mark this guy out right here, though. Let me see. I didn't really mark, and I'm not going to. There's a inverted fair value gap right here, right? You see it's a gap, it's a fair value gap, it's all of it. It's a gap and an inverted fair value gap, but it's really what I don't like. It's not. I'm just gonna stick with because the gaps are internals, but because usually when there's a gap, there's also a fair value gap, right? So there's no point in me calling it a gap when it's a fair value gap. And now it's an inverted fair value gap because 1, 2, 3 opening between the first and the third, price action displaced through it, meaning it went through it, right? And we could mark that out, but I didn't have it marked for my trading day, so I'm gonna leave it there. All right. I didn't worry about the 2 hour. As you can see, we have a 2 hour right here. If you want to mark it, we have a 2 hour inverted fair value gap right there. 2 hour green. And then we didn't have nothing down here that was 2 hours. So we'll leave that, right? The 1 hour, not too stressing about. You have a 1 hour up here just for the sake of the video, just to show you guys how to mark these out, right? There's a 1 hour right here. And of course, like, I'm not going to keep that there. That's stupid. But that's a 1 hour. All right. I'm not keeping that there. That's dumb. All right. So coming into the market, man, after we mark our draws of internal liquidity, man, we're going to go to I go to the 5 minute, you go to the 15 minute, you go to the hour. They're damn near the same. All right. Because where you see my highs, you see also highs, external liquidities to go get, and my lows, you also see them here also. Like, it all makes sense, right? But I usually go to the 5 minute. And then from where we started right there. I go to the left and I mark out the lows that price action probably wants to go get. Like this guy, like you see him, this guy, those are equal lows. Like that equal lows, that equal lows. And then I do the same thing for my highs, right? Is he about to cry? Lord. I'm coming. What you crying for? You good? You good? Is you good or is you straight? Let me know something. All right, so the same thing I did for my lows, I'm going to do for my highs, okay? So we start right here. I'm going to mark out this high, that high, that high, that high, and these equal highs. Those are all the targets I'm going to focus on if I enter in a buy. And if we were going in a sell, these are the targets I would enter. I would focus on if I would enter in a sell, okay? So my entry time frame is 2 minutes. Let's talk about it. Today was a perfect example, not really perfect, but it was a good example of the exceeded edge model, right? What does the exceeded edge model? Okay, All right. I'm coming. You're not even crying. You're just making noise. What in the world? That boy not even crying. It sounds like he crying, but he not. It's crazy. All right. So for the 2 minute time frame. Bruh. Hey, man. You gotta make up your mind, boy. You gonna chill? You gonna cry? What we doing? You a little hot, too. Why you so hot, baby? All right. So we know that we start on a 2 minute time frame. Coming in, we're looking for an external high and external low on the 2 minute time frame. Well, the external, let's see, how did that go? It was somewhere over here. The external high, well, to be honest, the high was the 928, and then the low was the 926. Well, we didn't get a solidifier, right? 930 actually brought us down to the weekly internal. And as you can see, everything is color coordinated for this reason right here. Even though things may look a little chaotic for the normal eye, I'm able to tell where we are based off my colors. This pink box lets me know what. We are coming in contact with a weekly internal. And what happens when price comes in contact with a high time frame internal after 930? Contact, reaction, execution. So we make contact at 930, 932. Boy, you hot. Why you so hot? Then what we do, we will react. Okay, now we're going on a downtrend, right? Downtrend, okay? But we break structure to the upside after coming in contact with the weekly time frame. Now, even without the exceeded edge model, we all know, by now we should know the algorithm to the charts. Internal, external. So if price is coming in contact with a weekly internal, we're either gonna, after we make contact with it, we're either gonna make our way to another weekly internal, or we're going for that weekly external. And the weekly external that we would be targeting in this case is the external high for the weekly time frame. Okay, now that's a long time. We have a long time to get there, but we can take advantage of that because what, we're following the higher time frame. So me knowing that, again, trading for 7 years, me knowing that, going on 8, me knowing that, what do? I see that we have internals here, but I'm not really worried about it. I know that it can slow us down, but big bank take little bank. You feel me? It's always gonna be like that. That's the law of the jungle. It is what it is. So I didn't worry about any movement that would come from price coming in contact with this hour and this 4 hour, because what? This is a weekly. This reigns over all of this. So what I do, I entered in my buy, and because I already pre-marked my targets, right? I know that I really want this 90. I really want this 90 point, right? I ended up getting 95 today, which is exceeding my target goal for the day. 90 points for anybody is good money. Even for the people, it did take a little long. So for the people trading at $1 a point, your $90 that you would have made today, $95 would have been, it would have taken a couple hours, right? Which is like, but you made it not doing anything. For me, trading at the lot size I'm trading at, that was a good bit. So anybody trading from $1 on up, bro, 95 points is all you need. Like, I mean, 100 points a day, 90, 75, bro, that's all you need, right? And as you can see, the highs that I pre-marked on my 5-minute time frame, those are the targets. And to be honest, it's more than that, man. It's experience. Like I said in my earlier videos, when you're entering a buy, you should look to the left to find your peaks of the mountain. It's like climbing a mountain. Vice versa, when you're in your sales, it's like jumping off a cliff. So you look to the left to find your lows. We were able to go on a 5-minute, and this is the 15, but it's the same thing, right? Excluding like small ones, right? Excluding this guy right here. Like if we take him, then it matches up with the 5-minute markup, right? So we have a high, 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 and a high. Those are all the highs that I targeted on my buy today, which resulted in me catching 95 points today, right? So very easy, very self-explanatory. Once you work the system, man, you will understand it, and this is something you can replicate daily. Let's go over what the exceeded edge model is. The exceeded edge model states that we're waiting a break after 9:30, right? After that break, ask yourself, where is the nearest high time frame internal? Internal liquidity, internals, fair value gap, inverted fair value gap, gaps, okay? If it's far, catch price 2, right? Enter your trade 2 because it was a break, and that's price telling you we're going in that direction and nothing's there to stop it. If it's close, you allow price to touch that allow price to touch that internal, meaning interact with that internal, and then you will wait for a reaction. Reaction via break of structure. After break of structure, you enter in your trade. So let's talk about it, right? So break to the downside because 928 we had already broken structure, but we broke structure to the opposite side again at 930. All right, break after 930, interaction with high time frame internal, meaning, and in this case being the weekly, reaction, break a structure, enter in your trade, and then execution. Well, interaction, reaction, execution. Okay, it's that easy, guys. It's a system that you can replicate on a daily, and the reason why you can replicate this on a daily is because it is the algorithm that the charts move off of. There are 2 objectives for every time frame: internal liquidity, external liquidity. External liquidity being your highs and lows for that time frame. Internal liquidity being the fair value gaps, inverse fair value gaps, and gaps. But me specifically, I focus on fair value gaps and gaps because that is the way I was trading before I ever came to YouTube, okay? And hey, man, I know you're having a great day, man. Forever Trade GDO come out with another video, man. If you guys want to learn how to trade like this, Visit neverquitexceed.com. Join the Discord. Become a profit time man. We do this every day. Every day we're going to get us at least 70, 75 points. And we're shooting for 100 points daily. All right, guys. So if you guys want to become a part of a family, be around like-minded people, hit the link in the bio, man. Yes, sir.